After 5 years of trading, I've been able to fine-tune my entries in order to have limited drawdown, the most confirmation and accuracy, and most importantly, consistency over time, which I document on a daily basis on YouTube, hosting over a 75% win rate, showing my trades live for more than 1.5 years. So in this video, I'm going to break down my exact entry models and what confirmations I use and why, and how this can potentially help you in your trading journey. So if that sounds interesting, definitely stick around and let's get straight into the video. Let's go. Alright guys, so when it comes to my entry strategy, I've been able to perfect it to a point where I can enter with limited drawdown and be able to enter entries that you can see here. So this has come from an accumulation of understanding basically 4 key concepts that I'm going to explain today in today's video, right? So we're going to keep this short and sweet and to the point so you guys get all the information. So make sure you stay to the end of the video so that you can actually find out all these steps because they are important. So step number 1, it's a basic step, and you can see on the chart I have something called sessions. So in order to get accurate entries, you need to be entering at the right times, and trading in times of volume are very important. Now on gold recently, marked by the blue box here, Asian session has been an outlier. Asian session has been delivering amazing volume, but usually with all pairs, London, New York and NYSE Open are the best times to trade. But as we can see on gold, obviously it's been delivering some heavy volume during Asian, but that's a consideration that, hey, I'm up during Asian, I'm going to trade Asian because that's where I see better opportunities of volume. So without knowing the sessions, without identifying that, you would miss out. So this indicator is called trading sessions. You can search it on TradingView. So how do we know what time to trade? So my rule of thumb is many people think London Open is the best time to trade. It's actually false. I like to trade 1 hour before London Open and during London Open, and only an hour after. So trading a session doesn't mean you get to trade the whole session. It's actually a small pocket window, which is usually 1 hour before and 1 hour after the session open for London. Now in New York, it's actually from New York Open to 1 hour after NYSE. That is your prime time. So whatever time zone you're in, calculate what time is New York Open and 1 hour after NYSE Open. That is your window. That is where you want to be taking trades, okay? So the next thing about my entry strategy, once you understand that part of my entry strategy is taking entries during volume, the second most important thing is going to be closes. This is number 2. 2 out of 4, which is going to be closes. You need to have closes. Why is closes very important? Because they give you confirmation. Now, my most used entry time frame is the 15-minute here, okay? So I'm going to explain to you why closes is very, very, very important here, and how you could easily get faked out. So what we're going to do is we're going to draw a little bit of a scenario. So this is a scenario here that I've drawn on the chart, which is basically price moving up with structure, and then we need to see how we're going to deal with this structure. So let's say our trading zone where we're looking to trade today is going to be above this resistance, and the next step, so you need to stay to the next step, is going to explain how and why trading zones are also important. But I want to explain closures first. It's very common for people to find their entries and start to see price moving very fast. It looks like this on your screen, pumping up and down. You start to seeing it push and boom, you rip buy here before this candle closes. Why? Because you fear that yes, your plan was to take buys today. Yes, your plan was to trade in this zone here. And yes, your plan was to take buys above these highs. That was all your plan. But the last thing to the plan is waiting for the close. You don't, because you start to see it pump like this, starts pumping up and down, and then you're scared you're going to get this candle and miss the move. So what ends up happening, you don't wait for the close and you end up getting a candle that looks something like this, and guess where your entry is? Right here. And it's like the worst possible entry, and then you think that the market's against you. You're like, there's no chance that I can pick this entry. And I'm sure we've all been there. You've literally took an entry right there. And what happens? You've lost all probabilities of your trade, because the probabilities come from candle closures. Because closures are doing what the wicks could not do. Because this price could wick a few times. We could see the next candle as well, close bullish here, but as well leave a wick. Okay, and then the next one, it tries to close above again. You could see this happen again. And I'm sure you've seen price action like this. You see it, tries to close above, it fails. It looks something like this, leaving a wick. And then what we finally get is we get a candle closing above. And this candle closing above is the confirmation, because this candle right here, what is this candle doing? This candle is doing what all of these wicks could not do, which is close above. Changes your probabilities massively. gives you a proper stop loss placement, allows you to do this. Now, if you're interested to see how I place stop loss, how I take my entries, do check out my videos. If you're interested to see how I know to look for buys or sells, check out my bias videos. I will link them in the cards up here, the bias video. I will also link my free course at the end of the video. You know, you have that prequel here that shows you. I will link the free course there as well. And if that's valuable for you, leave a subscribe and also leave a like. I would appreciate it to get above 500 likes. It really does encourage me and shows me that you guys are enjoying it. And if you recommend anything, put them in the comments. So getting back into what I'm talking about here, this is why closures are so important. They change probabilities by a hell of a lot because all of this is guessing. You're guessing, will price be able to close above? Because once price closes above, it's doing what those candles could not do. Continuation is a whole lot of percentage higher. Now, if you want to know how much percentage higher, I even argue it's up to 40% higher depending on certain external factors. But in a scenario like this, it's like 30-40% higher, which is massive in trading, man, massive. Any percent counts. So when you have that much confirmation, why wouldn't you? So candle closures, 15-minute is the time frame I'm looking at. I will use 5-minute for lower time frame. I just made a video of when to use 5-minute entries. I will link that above there as well. Or you just check my last week's video, you'll find it. So just go to my channel before this video, see when this video is posted, and the video before that is about 5-minute entries. So 15-minute, 30-minute will work, everything will work. Okay, so number three out of 4 here, and we're going to get into some examples because I love to show you guys examples. Number 3 is going to be clean zones. Why do I want to be trading in clean zones? You see these clean zones? Here's a very nice example. If I draw one line here like this, these clean zones, so where we have clean candles like this is exactly where I want to be trading. Why? Because this is a smooth area. There's no friction here. What causes friction in the market? Ceilings and floors, which is known as support and resistance, because price can reject that. There's structure there, we can reject it. Why can we reject it? Because there was an opposite amount of orders in that zone. We could potentially reject from that zone there. Now, that's why marking your support and resistance is extremely important, or having a markup to know where you can and cannot trade. If you don't know where you can and cannot trade, guess what? Just how the market works, you're probably going to trade in the wrong place and lose, because that's just how the market works, right? And we want to avoid that. And if we can avoid that, that's exactly what we should do. So we can. How do we avoid that? Well, we concentrate to look for clean candle zone. So what's a clean candle zone? Basically, no support and resistance. Here's a resistance. How do we know that? Bullish candle followed by a bearish candle creates a resistance. And a support down here is a bearish candle followed by a bullish candle. As I've mentioned in the video, on my channel is in-depth videos about that concept itself. I'm hooking you guys up, you see, not letting you, stranded there. There are videos to hook you up on that stuff there, okay? Now, it will take some time to learn to mark your support and resistance. Everyone who joins my exclusive group where they trade with me live, I actually make them send me support and resistance so I can double check it and they compare to my analysis on a daily basis. So it is a skill that will have to be learned, but don't be upset if you get it wrong. It's here and there. It's just part of the game, all right? So these zones between the support and resistance are money zones. Like here, look at the thing, because what price ends up doing usually is if it could move clean in the past, we can expect a clean move in the future with closes above, with volume time. That's very cool. Because if I were to switch on volume, Asian session, what did we say? Gold was moving during Asian session. So we close above. Look at your close above. I can draw a line here. That's your close. Perfect close. What do? We move. We move. And that's what ends up happening. So because of volume, right? Volume and clean zone. So you see how it's put together. Where's our next clean zone? Our next clean zone is here. Guess what happens? We mess about. Actually, technically, our next clean zone is above this previous support here. So once we get above there, there should be a clean move, which we could see ended up playing out. And then our next major clean zone will be above there. And once we get above that, we should see a clean move repeat. And you can see, remember, we drew this example. Reject, reject, reject. Wicks don't matter here. They're just not doing what candle closures could not do until we actually, look at that. Same thing we drew, right? We drew this at the beginning. Heavy rejections coming from this zone. Why? Because we didn't close above. And watch what happens the minute we close above. When something finally closes above, look at what the difference it makes here. Look at the difference it makes. Can you see the difference? Like, this is some golden shit, man. I'm telling you. Like, look how many times it rejected. I mean, how many people got cooked here? Jumped into buys, then came back down here. They tried to sell the lows. They were too scared to enter here, so they sold the lows. It went in a little bit of profit. They tried to hold more, reversed on them. Then they started seeing going in their direction. They continue to hold. Then you get stop loss hit. Then you take buys with tight stop loss because you don't want to lose anymore. Then this stops you out. Then it ends up playing out here. And then, you just end up in a mess. You know the story, guys. I don't have to tell you. So this is why making things with rules are very important. So closures, very good, right? The last step here, which is going to be the biggest step, is I want some type of structure. What do I mean by structure? I don't want straight green candles. I don't want to buy after straight green candles. I don't want to sell after straight red candles. I want some sort of break in the market, some sort of pause, something like this to give me the confirmation that prices, I'm not buying a high, I'm not buying a low. Because normally after a big push, it's probably going to be close to a high. Big push ends up being a high. Big push, does this end up being a high? Let's have a look. Yeah, it does, right? So it ended up being a high, right? Same thing, big push down, ended up being a low. So I don't want to be part of that. So let's get into a few examples to keep this video nice and short. And here's one that we took close above, right? These are all taken live. I take them on stream. Join us Monday to Friday, London session if you're around. Pull up on YouTube, all for free. So this is an entry I took here on DAX. Close above, structure, boom. Amazing push. Volume. Why volume time is so important? Exactly. Now this is a bit complicated because you see this small resistance here. I'd like to show you this is a 5 minute. So I want to show you that it always doesn't look perfect, right? Because many people think trading has to look perfect. Doesn't. There has to be scenarios as long as I have room. Here's one that will be a little bit more clear, more of a perfect trade where we have structure. We close below, clean candles. Here's the close. I didn't enter before the close and boom, we get a nice move down. Here's another one. We also get a nice push. I do have a journal here. You can go through my journal. This is linked in the bottom of the video. You can see the trades that I take on the journal and watch back the live stream. Here's another one, clean candles, close below this. That's a beautiful one as well. So these are all solid ones. I mean, you can go through this yourself. You can watch the live stream recording as well to see the trade played live. But I hope that this video about my entry strategies and some key tips, my 4 key tips from my entry strategy, have really helped you. If they have, let me know in the comments. Leave a like on this video. Subscribe to the channel for more content like this. It really does help. And let's get it, guys. Take care, trade sharp, and hopefully catch you guys very, very soon. Peace.